Hey everyone, welcome back to Corporate Decoder. In this video, we will dissect the latest SEC filing from Horizon Funds. It looks like they've been busy with a major reorganization and some interesting performance numbers. Before we dive deep, if you love getting the real story behind corporate filings, hit that subscribe button and ring the notification bell. We also have a community Discord server linked in the description below where we break down these reports in real time. Today we're looking at the N-CSR filing for Horizon Funds, which is essentially a shareholder report. This document gives us a peek into how their different investment funds performed over the past year up to the 30th of September 2025. They have a few funds, but we'll focus on the Center American Select Equity Fund and the Center Global Infrastructure Fund. Let's start with the Center American Select Equity Fund advisor class. The report tells us this fund returned 7.71% over the year. Now that might sound okay, but it significantly underperformed its benchmark, the S&P 500 Total Return Index, which shot up by 17.60%. Ouch. What caused this underperformance? The report points to sector allocation, mainly being underweight in technology and overweight in healthcare. While stock selection did help, it wasn't enough to overcome those bigger sector bets. Looking at the portfolio composition, financials made up the largest chunk at 24.4%, followed by healthcare at 16.2%, information technology, where the market saw a lot of growth, was only at 6.0%. That's a big reason they missed out on some of those tech gains. And check this out, one of their top holdings is actually an ETF, the iShares Russell 2000 ETF at 9.8% of net assets. Another top holding is Newmont Goldcorp at 3.7%. It seems like they are holding quite a diverse basket of assets. Now let's look at the long-term picture for this fund. For a hypothetical $10,000 investment by the 30th of September 2025, the advisor class of the Center American Select Equity Fund grew to $35,753. That is a solid return, but compare that to the S&P 500 Total Return Index, which would have grown a $10,000 investment to a massive $41,530 over the same 10-year period. That is a significant difference. The average annual returns show this trend clearly, 7.71% for the fund versus 17.60% for the S&P 500 over the last year. So what has changed for the fund? The report states that the Center American Select Equity Fund was reorganized into the Horizon Funds Trust on the 17th of April, 2025. The investment advisor also changed to Horizon Investments, LLC, though the portfolio manager stayed the same. This reorganization also came with a reduced expense ratio, which is always good news for investors. Let's switch gears to the Center Global Infrastructure Fund advisor class. This one performed much better, returning 15.88% for the 12 months ended the 30th of September 2025. It slightly outperformed its benchmark, the S&P Global Infrastructure Total Return Index, by a small margin. The report mentions stock selection and sector allocations were positive, but country allocations detracted a bit. Looking at where they invested, telecommunications was the biggest sector at 29.3%, followed by utilities at 27.4%, and oil and gas at 24.3%. This focus on infrastructure makes sense given the fund's name. Their top holdings include Verizon Communications Inc. at 7.0% and AT&T Inc. at 6.2%. These are big established companies, which aligns with the infrastructure theme. Geographically, the United States makes up the largest portion of their investments at 53.8%, followed by Canada at 14.2%. They also have investments in Japan, Germany, and other countries. Since its inception in January 2018, a hypothetical $10,000 investment in the Center Global Infrastructure Fund advisor class grew to $16,506 by the 30th of September 2025. That is an average annual return of 6.75%. For comparison, the MSCI World Index, a broader global stock market benchmark, would have turned that $10,000 into $21,866 with an average annual return of 10.74%. So, while the fund did well this past year, its long-term performance hasn't quite kept up with the broader global market. Now, let's dig into the actual financial statements, because this is where the real story is. For the Center American Select Equity Fund, the total net assets as of the 30th of September 2025 were a substantial $300,694,275. This is interesting because the net assets were $419,879,067 just the year before. That is a significant decrease. Looking at the gains and losses, the fund experienced a net realized gain of $80,862,758, which sounds great. But this was heavily offset by a net change in unrealized depreciation of $68,781,457. This means that while they sold some investments for a profit, the value of their remaining holdings dropped significantly. Then we have the Center Global Infrastructure Fund. Its net assets are $83,747,166 as of the 30th of September 2025. This shows significant growth from $30,588,951 the prior year, which is a very positive sign for this fund. On the operations side, this fund saw a net realized gain of just $56,696, but a strong net change in unrealized appreciation of $7,009,874. This indicates that while they did not realize large gains from selling assets, the value of their existing investments increased substantially. Let's get granular with the Center American Select Equity Fund's investments. The schedule of investments shows a hefty $240,454,203 in common stocks. This is broken down by sector, with banks taking a large slice at 19.1%. It is clear they have significant exposure to the financial sector, with companies like Citizens Financial Group, Incorporated, and M&T Bank Corporation being major holdings. Then Therese the 9.8% in exchange-traded funds totaling $29,359,426. The top ETF is the iShares Russell 2000 ETF. This shows a dual strategy investing in individual stocks and also in broader market indices through ETFs. Now for the Center Global Infrastructure Fund's investments, a massive 97.9% is in common stocks, totaling $81,979,459. Their strategy here is quite different. The top industries are telecommunications at 29.3% and utilities at 27.4%. They are heavily invested in these sectors, which are often considered more defensive. Geographically, United States are at 53.8%, Canada at 14.2%, Japan at 9.2%, and Spain at 4.6%. It shows they are looking for global infrastructure plays beyond just the US. Digging into the notes, we find some crucial details about the reorganization that happened around April 2025. Basically, the old center funds were rolled into these new Horizon funds. This means the investment advisor and the portfolio manager have changed, though the core strategy and team seem to have remained largely the same. Importantly, expense ratios have been reduced, which is a win for investors. Before the reorganization, that is before the 17th of April of 2025, Center Asset Management, LLC, was the investment advisor. They had advisory fees, and importantly, they had expense limitation agreements. For the Center American Select Equity Fund, they agreed to cap total operating expenses. For the investor class, it was capped at 0.95%, and for the institutional class, it was 0.95% after adjustments. This is a crucial detail for understanding the true cost of investing. After the reorganization on the 17th of April 2025, Horizon Investments, LLC, took over as the advisor. They also have these expense limitation agreements in place until the 31st of March 2028. The limits are similar, 0.95% for the Center American Select Equity Fund's investor and advisor classes, and 1.05% for both classes of the Center Global Infrastructure Fund. These agreements mean the advisor will cover some of the fund's expenses to keep the overall cost down for shareholders. Analysts, so what is the big takeaway here? Firstly, the Center American Select Equity Fund had a tough year relative to the market, largely due to its sector bets. While stock picking was decent, it wasn't enough to counter being underweight in high-flying sectors like technology. Its long-term performance also lags the S&P 500 significantly, which should make investors think twice if they're looking for pure market, hugging returns. The reorganization is a significant event, but the fact that the expense ratios have been capped and reduced is a positive move for investors. The Center Global Infrastructure Fund, on the other hand, had a stronger year, slightly outperforming its benchmark and showing substantial growth in net assets. Its focus on utilities, telecom, and energy infrastructure provides a more defensive tilt, which might appeal to investors seeking stability. While its long-term returns haven't matched the broader MSCI World Index, its performance this past year is encouraging. The key risk here would be sector. Specific downturns or adverse global infrastructure policies. Ultimately, Horizon Fund seems to be navigating a transition. The reorganization brings clarity on the advisor and some cost efficiencies for investors. It is crucial to understand the specific objectives and performance of each fund. The Select Equity Fund looks like it might be trying to play a more value-oriented or defensive game, while the Global Infrastructure Fund is investing in steady, regulated industries. It's not a one-size-fits-all approach. and investors should choose based on their own risk tolerance and market outlook. What is your take on these reports? Do these fund performances align with your investment goals? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe to Corporate Decoder for more in-depth financial analysis. Don't forget to join our community on Discord, linked in the description, for more real-time insights and discussions. Thanks for watching, and I'll see you in the next video for analysis.